Good morning. Life insurance companies as CRE lenders. Why investors love them? When most investors think of commercial real estate or CRE financing, they picture banks or CMBS lenders or private debt funds. But quietly, behind the scenes, life insurance companies or life cos have quietly become some of the most stable, competitive, and investor friendly lenders in the industry. And let's break down why savvy borrowers and mortgage brokers often seek them out first. So, what are life insurance company loans? Well, life insurance companies manage massive investment portfolios, and they have to produce predictable long term returns to match future policyholder obligations. So, how they do this and how they achieve this is they invest heavily in commercial real estate loans, favoring high quality assets with low risk properties with strong tenants and predictable cash flow. Now, these loans are typically a little bit more conservative in leverage. Think 50 to 65% LTV. Often have a fixed rate for 5 to 30 years. And here's one thing that a lot of people like, they're generally non recourse, which protects borrowers' personal assets. They're generally amortizing loans, which reduce their risk over time. And in summary, life cos act more like institutional bond investors than really aggressive lenders, which makes them perfect partners for borrowers seeking rate stability and portfolio diversification. So, why do borrowers love life company financing? Well, lower interest rates is usually the number one. Life companies often beat banks, debt funds on pricing for stabilized income producing assets. They offer longer term fixed rates. Sometimes you could even lock in rates for 10, 20, or even 30 years, ideal for core assets and generational holdings. They're typically non recourse loans, so you're protected from personal liability if the property underperforms at some point. And the key caveat there, as long as there's no fraud or misrepresentation, you won't trigger any of the carve outs. They have flexible prepayment options, and many offer yield maintenance or step down structures to accommodate sales or refinances in the future. And here's what they really offer: stability and certainty of execution. Life companies are portfolio lenders, meaning they're going to hold those loans on their balance sheets. And that translates to smoother closings and fewer surprises because there's no secondary market transaction after the fact. So, here are some ideal property types for life company loans. Life insurance lenders typically favor Class A and strong Class B properties in major or secondary markets with proven stability. And oftentimes their sweet spots will include office buildings, well leased, or medical office buildings, industrial buildings, distribution or manufacturing facilities, multifamily properties, so core or stabilized suburban properties, retail centers. So think grocery anchored retail centers is kind of where they would focus. They're generally going to avoid construction or transitional deals, but they'll compete aggressively for stabilized income producing properties with strong fundamentals. When life co loans beat other options. So, life insurance companies often win deals when presented with these scenarios. So, the investor wants low leverage and long term stability. The property is going to be a core or core plus property with consistent occupancy. And the borrower values relationship lending and a non recourse structure. Now, let's contrast them with banks. And banks and bridge lenders usually take the lead when the property needs renovation or lease up or repositioning. And let's talk about the medallion fund's advantage. At medallion funds, we work with hundreds of institutional capital sources, including life companies, pension funds, as well as credit unions. And our role is to match each client's investment goals and hold period with the right lender structure And that ensures that you, our clients, get the best rate, the best leverage, and the lowest terms possible. Now, if you own or are acquiring a stabilized CRE asset, it's worth exploring life insurance company financing. You just might be surprised at how competitive it is. And here's the bottom line takeaways for today. Life insurance companies may not advertise on every corner, but they're a powerful and reliable source of CRE capital. And in uncertain rate environments, they offer what every investor craves: long term stability, strong underwriting, as well as predictable performance. Now, if you're considering your next acquisition or a refinance, let Medallion Fund shop Lifeco options for you. And that's it for the day. Hope you have a good one.